Hello and welcome. Before we begin, I want to give everyone 30 seconds to get logged in as we expect many attendees for today's session. If you're just joining us, we're giving all attendees around 30 seconds to get logged in, and then we'll begin with the webinar. Okay, hello everybody and welcome to today's webinar, tackling the rise of APP fraud in the digital payments era. My name is Jack Halliday and I'll be running today's session. Before I hand over to today's speakers, I'd like to remind all attendees to please engage as much as possible by asking questions. If you have any audio or visual issues or questions during the broadcast, please message in the chat box. Also want to remind you that today's session is being recorded and a full version of the recording will be sent out after the webinar. Now, without further ado, I'd like to hand over to today's moderator, Jimmy Franklin.
Hello, everyone, and thank you so much for being here today to discuss all things authorized push payment fraud. Before we get started, I'd like to take a moment to introduce Vixio and what we do. We are a RegTech company providing independent, authoritative, and actionable regulatory intelligence for compliance, regulatory strategy, and development professionals. Our mission is to help businesses understand the impact of regulatory change, both the challenges and opportunities, so that they can meet obligations while staying ahead in an evolving regulatory landscape. And as for me, I'm Jimmy, a senior journalist at Vixio's editorial team, primarily covering regulatory developments in the UK and EU, and in recent times that has included delving into app fraud policy responses, which me and my colleagues recently compiled a report on. Now, turning to today's discussion, I think that this subject is one of those ones that's been one of the big threats facing the payments industry, and it's something that impacts everybody in the payments chain. And if you go to any conferences, everyone has a different opinion on how to deal with it and what the approach should be from regulators and the industry. Today, we'll be exploring the latest trends and common types of app fraud, regulators and markets around the world and how they're responding to the growing threat, and what payment firms can do to mitigate those fraud risks while preparing for increased regulatory scrutiny that's happening in the UK and further afield. We have a lot to cover, so let's dive in and we'll start with our speakers. I'm going to turn first to my colleague, Prasad.
Hi everyone, I'm Prasad and I'm a senior analyst here at Vixio, working with Jimmy. I have a specific focus on the APAC region with looking specifically at the Southeast Asia, Indian, and East Asian regions. And I'm delighted to be here today speaking about an issue that's affecting all of us across the globe, really.
Fantastic. And Jaspreet?
Hi there, I'm Jaspreet Kaur, Senior Consultant in the Payments team at Cosegic. My areas of expertise span all things relevant to payments and e-money regulations, from compliance advisory to compliance audits. With past experience at the regulators, banking and payment institutions, I have a keen interest in authorised push payment fraud and have become the app fraud SME at the team, where I've been involved in developing app fraud frameworks and delivering training to firms. In this webinar, I look forward to exploring the impact of app fraud and reimbursement development in the industry and beyond.
Fantastic. Abu?
Thank you, Jimmy. So my name is Abu Bangura. I'm also a senior consultant in the payment services team at Cosegic. I have been at Cosegic since 2020, and I help firms navigate FCA regulatory issues, including payments regulations and financial crime. In my previous life, I spent a decade in various senior compliance roles at payments institutions and e-money institutions, including as a money laundering reporting officer.
Fantastic. And last but not least, Tijal?
Hi, I'm Tay. I work for Feedzai as a fraud and identity SME, and that kind of spans your global end-to-end risk ops solution. So we are a provider of end-to-end risk ops solution. We protect over 1 billion consumers and around $8 trillion worth of transactions are processed through the Feedzai systems. You might have most recently seen us in our MasterCard partnership announcement. Prior to that, I was at HSBC and Barclays, again in a global fraud role.
Brilliant. So yeah, lots to discuss today and some very esteemed speakers to do that with. So a place that I'd like to start, considering the rules that came in October last year in the UK, how are firms adapting to the current regulatory environment? And I wonder if Jaspreet, you'd be able to take that.
Sure. So what we've seen out there is payment e-money firms and banks are still concerned and on the edge about app fraud because these scams are occurring rapidly and targeting everyone from different angles. It's so hard to keep up with the advanced techniques and creative ways used by fraudsters to scam. Firms are either still assembling their app fraud frameworks together or developing it to how they see fit in readiness for any claim. We're not really seeing a real confidence in firms managing reimbursement claims in the right way, as there isn't a great deal of regulatory guidance out there to help them. There has been incidents where an app fraud has come out of the blue and for an unforeseen amount, which has caused panic, especially for those unprepared, which is why scam awareness by staff and good claims management practices are absolutely imperative. And so it does beckon the question, what does a good app fraud framework look like? Other than the usual suspects of better onboarding, more customer monitoring and appropriate governance, frameworks should be designed in the right way to produce the right outcomes for themselves and victims. And so an effective set of controls should really comprise of a good set of app fraud policy and procedures, including a well-designed claims process, updated fin crime risk assessments to consider app fraud risks with a close lens on EDD and enhanced transaction monitoring, updating your customer communications on the firm's website and T's and C's to warn customers of risks and its reporting channels, which we are pleased to say lots of firms are doing, and producing useful and digestible management information, which is an important data and oversight tool too. Now, firms really need to look at their fraud data to assess the capital and liquidity risks. So it's a cost-benefit analysis, if you like. Firms must really ask themselves how much surplus cash should be ring-fenced for a potential reimbursement claim from a hypothetical stand-in. And if the firm is within a group, are the current legal entity arrangements allowing for this? What I'm not seeing too much is firms thinking about the impact of app fraud on vulnerable customers and the measures taken to look after them during the process. I'm quite pleased, though, dare I say it, that the FCA put out some comms last week reminding industry of good and bad practices by firms in managing vulnerability and some consumer support observations. I would recommend, though, that firms have a read of that and translate it into their claims management process. Now, a common issue for firms is the investigation of a reimbursement claim, and on a timely basis to the 5 business days or the 35 business days maximum for some cases. And within that process, firms have to apply the standard of caution to prove gross negligence on the customer side. However, firms must equally have appropriate fraud prevention measures in place to fight their corner if the victim considers that they've not met their duty of care to protect them. And so in the claims investigation process, firms should look back to see which fraud prevention tools were deployed during the customer's payment journey. So other than confirmation of payee, account freezing is used as an effective anti-fraud control to stop further fraudster activity once it's been raised to the firm's attention. And you may recall it being cited in a FCA DSCO letter in February of 2023. So with the account freezing, it can be used during the 4 business days extension for investigation suspicious transactions, which is a right deriving from the Payment Services Amendments Regs 2024. It would certainly be interesting to seek a financial crime point of view on this here, though.
Yeah, absolutely. And Abu, what kind of fraud management controls have you seen embedded by firms to combat app fraud? And I guess as well, it'd be interesting to know what they should be considering in implementing for managing suspicious payments from a financial crime perspective.
Yes, thank you, Jaspreet, and thank you, Nemi, for the questions. Just to follow up on what Jaspreet said, what we advise clients that they should keep in mind, as alluded earlier, really the FCA guidance on payments delays. This really allows them to slow down the process of processing of payments when they have reasonable grounds to suspect that someone who is not the payer is being involved in the scam of the payments. So this allows firms to ask the customer to provide more information on can provide some assistance to get everyone comfortable that the transaction is not a scam. However, as stated earlier, the delay cannot be more than 4 working days, but crucially, that's taken from a consumer duty perspective, the firm must execute the payment order as soon as the concerns from the firm have been alleviated or addressed, rather than wait the full working days to lapse. Now, what I will say from a financial crime perspective is that to make use of this tool in terms of payment delays, it's really important to ensure that certain red flags have been identified, such as unusual transaction patterns or discrepancies in customer information. So this delay can only be applied in the context of APP fraud. So that means that only where payments were authorized by the payer and the firm suspect that frauds has been occurring by someone other than the payer. What I will say is that in terms of managing the communication with the customers, when firms suspect that the payer might be complicit in a fraud, then they can no longer rely on the payment delay from the FCA. On this, the account freezing procedures shifts from the FCA payments delay to a suspicious activity regime. So at this stage, the firm must be paying attention to ensure that any communication does not fall foul of the tipping off requirements from a money laundering perspective or terrorist financing perspective. Although I must say that communicating with customers when dealing with high-risk payments can create a positive friction and provide good customer outcome, especially when the customer can be allowed to explain what the transaction is about and whether this is actually a scam or not. Another point.
Sorry.
Yeah, go ahead.
It's incredibly interesting that you bring up kind of terrorist financing, suspicious activity regimes, because I think that's one of the biggest examples of change that we've seen across the current regulatory environment, especially in the UK. The shift of terminology even. So mules shifting from AML to now fraud, where previously these two departments almost were very compartmentalized within banks. We're now seeing a bigger shift where we are focusing a lot more on mule accounts. Feedzai itself has implemented the inbound payments into a lot of our clients so that we can kind of not only look at what happens after the fraud has occurred, but make sure that we're taking steps to prevent fraudulent lands from coming into mule accounts, especially in response to the PSR, the shared liability frameworks.
Yeah, absolutely. And I wonder as well, it'd be interesting to look at the confirmation of payee element to this, because I feel like confirmation of payee has been something that's really been able to reduce some of the risks, and I think has been a bit of a success story so far for the UK with app fraud.
Yeah, thanks, Jamie. That's a good one, actually. You just read my mind. Confirmation of payee has certainly been recognised in the UK ecosystem as a must-have sort of application programming interface or API-based system, if you want to call it, for directed PSPs to use at the start of the transaction. It's an account verification checker, ensuring the account identifier, so the name, sort code, and account number match with the payee, aka the beneficiary. Okay, that's essentially its purpose. And the PSR directed a lot of these firms to have that in place by 31st of October last year and the year previously. depending on which group you had to sit in. So it's group 1 and group 2, they divided PSPs in two. So COP, confirmation of payee, whatever you want to call it, is particularly beneficial for firms to embed because it ensures that customers is knowingly taking the risk to transfer funds to the beneficiary. So it's that key word there, knowingly taking the risk, right? So even if the details don't match the directory, they'll still continue to send the funds. Nine times out of 10, lots of people do that, unfortunately. Okay, so the risk is on them if there is a mismatched payee. So this is very useful for the firm, the sending PSP, in their defence if it gets messy in the claims process. So that's a win-win there. Now, in terms of its disadvantages, it's only applied, obviously, at the outset of the transaction, which means it only protects the sending PSP more so than the receiving PSP, which isn't a great safeguard for more complex business models, which transfer funds through various PSPs, such as ecosystems connected to merchants. So there has been concerns about it only being used for domestic payments rather than international ones, but I know that's been rolled out by a lot of countries and it's known by verification of payee. And there's almost a sort of domino effect where lots of countries are now implementing that. But secondly, with these different types of frauds and scams out there, such as romance scams, COP is pretty redundant, I think. As a payer claims to be sending it to the payee, who they have relations with, which of course are gained through manipulated intentions by the scammer. So it's really hard to prove the fraud here through this type of check-in device. So all in all, confirmation of payee, in my view, provides some sort of mitigant for firms and obligates directed PSPs to have a universal control like this in place. It sets the standard and tone, but it's not very effective in stopping the scam and all types of scams.
Yeah, I feel like romance scams have certainly kind of caused a bit more, there's been a lot more interest in them, let's say recently. I felt like they're in the headlines quite a lot. Is there any kind of other checks that could be put in place by firms to be conducted in addition to confirmation of payee then, to perhaps enhance its use or bring in more tools for prevention?
I think from my perspective, I'm sorry, I was going to say that obviously the confirmation of pay is not the be all or end all, especially in romance scams. But I think when they are partial matches or no matches, this is an example where firms could think about displaying targeted messages to risk the customer about the risky nature of the payment, and especially if the payment is made to a new beneficiary. Obviously, to do that, how do you do that? You need to ensure that you have high quality KYC data and high quality ongoing monitoring data, and that's basically you understand what are the expected behavior of this typical type of customer or the specific customer as well. And in terms of implementing machine learning that can allow firms to almost have like a very good profile of who the customer is and whether they could be vulnerable to any type of payments. I think this could be the one of the additional safeguards put in place to supplement confirmation of pay.
Fantastic. And Tay, did you have something to say there?
Sure, I'd absolutely echo that sentiment. And at Feedzai, we very much believe in like a segment of one profiling to that effect, looking at each customer individually and assessing how their payment history is, what they're more likely, which way are they more likely to transact in, etc., versus what is a very traditional cohort profiling to say this group of customers in this demographic bank a certain way, as we know that that's not effective anymore. Additionally, in terms of extra alerts, we're seeing regions adopt a more risk-averse approach to create dynamic journeys. So through the journey, so for instance, our digital trust product would pick up different behavioral signals, potentially being under pressure and things like that, and a different way to transact. And we will then step up that journey, or we will help our clients step up that journey. So in Singapore, for instance, on creation of a new beneficiary, if you hit certain risk criteria, they will ask you to verify with your SingPass, which is their government ID system. In the UK, we could probably replicate that just using your identification system. So the same way we do when you open an account now with a digital bank, you scan your ID, you do your selfie check, etc. So these are all different ways that we're asking customers to authenticate in a stronger way when there's something risky happening. Again, targeted messages. Feedzai have also recently launched Scam Alert, which will basically enable the customer to upload a screenshot or something similar of a situation that they're in. So for instance, purchase scams are huge at the moment. And again, a situation where confirmation of pay doesn't necessarily help at all. So they're able to upload a screenshot of this is the advert I've seen, and Scam Alert will come back with any red flags that we see and then recommended actions off the back of that. So for instance, to gain an idea of what the seller's return policy is, etc. And then we'll flag red flags such as there seems to be an urgency of request for money, the price is too good to be true, this is something that we've seen before, and just more interactive indicators to gauge the customer's attention. It's far too easy now to ignore you should be careful because this, that, and the other. There'll be OTPs being compromised with the text directly preceding it, do not share with anybody. We see these things so often and it's not interactive enough to be an effective stop for the customer.
No, exactly. I mean, fraudsters are always seemingly innovating quite a lot. And I suppose in the UK, I mean, with recent news that I'm sure all of us have seen, can we expect any changes in the UK approach to app fraud? You know, we've had this huge change with the reimbursement claims, but is there anything else that can be expected along the way? Jaspreet, I wonder if you'd be able to take that.
I think in general, I mean, I can certainly use my crystal ball and prophesize what I think may happen. I can't be held accountable, obviously, to all of my visions, skis a pun, but I can certainly let you know what I've seen and what I think could possibly happen. So firstly, depending on fraud management outcomes across the industry, because that's what it all comes down to. The key word which the regulator loves to use is, of course, outcomes, consumer duty outcomes, fraud outcomes. You know, it's a buzzword at the moment. So it's all about data, right? As a data-led regulator, that's FCA's priority at the moment. It was a very different beast, I think, years ago when it was involved in clearing up the libel scandals and that sort of thing. So we can safely say that metrics is something that firms really need to focus on. Given that, it does sort of invoke a sort of hope for a lower reimbursement level. So at the moment it's 85,000K, as you know, originally 415K, so it's dropped significantly, thank God. But hopefully there will be another reduction to 30K. Now, you may recall this was proposed by the then Economic Secretary Tulip Siddiq in September last year. Yeah. So if the metrics that are received by Pay UK show that there is an encouraging improvement in fraud prevention and lower app fraud trends, they could possibly, I think, in my view, consider lowering the reimbursement threshold. Could be 30K, could be, you know, something above 30K, who knows? But, you know, that's why it's so important that firms look at their data, collect it, digest it, talk about it, report it, you know, be confident with what you're presenting to Pay UK and your fraud prevention frameworks. So I think that's one sort of prediction there. On another point, I think there's likely to be further comms and consultations from regulators, plural, to review how well firms are progressing with that fraud management and if more regulatory instruments need to be advanced. So if we have elements of PSD3 that are going to be transferred into PSD2, what could this look like for app fraud? That's obviously the burning question. Could there be more strong customer authentication that Tejo alluded to earlier, or could it be applied more frequently? So there was mention of this in the FCA Dear CEO letter of February of this year, that the new payments vision could involve the replacement of strong custody authentication to a different type of authentication model so that it can be used prescribed in regulatory technical standards. Now, this makes it more onerous in my view, and it holds firms more accountable to security standards. So I'm not really sure how it will work out. And removing SCA could cut out 3D Secure for cardholders, which is an essential security layer. If anything, I think it could be quite a controversial area of reform, so it would be really interesting to see how it plays out. Now, there are a few other observations with PSD3 that are out there. So customer warnings could be mandated to compel PSPs to put up suitable warnings about app fraud and fraud per se. It's part of the standard of caution anyway, but having that in legislation makes it more real, more of a stronger request to PSPs. And also, FCA could indeed be taking more of a financial promotion strategy here, which, as we know, promotional risks hasn't really been incumbent on payment firms with any real rigour yet. And then obviously you have information sharing relating to app fraud data, which could be written into law. And that's where the payee's unique identifier is shared with other providers in the claims investigation process. So the data can only be retained for its intended purpose and for no longer than necessary. So evidently, new regulation is staring sharply to data protection requirements. And that said, I wouldn't be surprised if the Information Commissioner had a stronger role in dictating the use of fraud data and holding firms more accountable with its use. So just moving on, there's another point that I think will be quite revolutionary in terms of reg development in the future.
Okay.
And that's having closer collaboration between UK regulators, again, plural, with social media platforms, anti-fraud organisations, PSPs, merchants, those key players in the payment chain. So perhaps the likes of Facebook and Instagram and its participation in the payments world will fall under the scope of the regulator's oversight one day. Now, in terms of social media collaboration in tackling the rise of app fraud, the government, as you know, issued the Online Safety Bill on the 26th of October a couple of years ago. This holds social media firms accountable in its duty of care to protect service users from content which could incur or invite fraudulent activity. So this means that paid for adverts and search engines are scanned and identity checked by social media sites with more scrutiny before uploading. So the burning question here for me is how does a collaborative approach help the payments industry? So the shared responsibility to detect and prevent app fraud crime does alleviate some of that burden for the financial industry in vetting for fraudsters before payments are instructed. However, payment firms are still required to be more vigilant about suspicious payments and data trends and to really question transactions at the outset, to develop relationships with technology providers, if possible, and to share trends where safe to do so with other PSPs and even the regulator. So if we look overseas, we can already see that in Singapore, for example, in managing phishing scams and the unintended sharing of its data, the regulator obligates telecommunication firms to pay out. So I think from that we can safely assume there is scope to broaden app fraud liabilities to non-financial institutions in the UK too.
Yeah, absolutely. And I think last week, the Treasury Select Committee, the PSR, were on it, and they did mention Singapore as one of the jurisdictions to look at for, changing liability rules slightly. So it's definitely a debate that's going on here and also in the EU as well as they renegotiate the payment services regulation. Prasad, as our in-house APAC expert, I suppose, be interesting if we could get some perspectives from you on what's going on in Singapore and elsewhere, because I think that actually APAC has been a bit of a dark horse when it comes to app fraud.
I think the thing with APAC is just the breadth of responses or regulatory responses we've had. I think that really feeds back to the different development stages that a lot of countries in APAC are. We've got countries like India where millions and millions of people having their first days of digital payments or indeed non-cash payments for the first time. Whereas you have places like Singapore where digital payments have been commonplace for decades now. But there are a few common trends across all of them. Payee name confirmation has been a big thing in Southeast Asia, especially Malaysia and Singapore, for I'd say more than a decade now. And this is obviously a lot easier in countries where you have a centralized ID system. It's much easier to implement, and India has just started implementing it as well. But I think in recent years, there's definitely been a trend towards compensating customers and allocating liability. You were speaking earlier, Jaspreet, about the shared responsibility framework in Singapore, where liability is allocated between the liability for compensation rather is allocated between the payment service provider and the telco for phishing scams or OTP scams. And we've seen similar things popping up. Australia, which has just passed its scam prevention bill, will hold firms accountable if they do not take steps to detect, prevent, and disrupt scams. Now, what the implementation of this will look like, we still don't know yet, but it looks to be sort of on the same trend of what you're seeing in the UK and in Singapore. Now, India, as part of its payments vision in 2025, it's thinking of creating a digital payments fraud compensation fund, which payment service providers will be required to pay into and will be used to compensate victims of digital payment frauds. So it could be a really expensive time indeed.
It's interesting you say the new payments vision, actually, because I have a few concerns about that. Because obviously you have the new payments architecture, which will be coming into play in 2026 and could possibly move forward, who knows. And at the moment, reimbursement applies to faster payments and CHAPS because of specific direction 20 and 21 issued by the PSR. When we have the new payments architecture, we have all the retail payment systems merged into one, so one central infrastructure there, which means reimbursement inevitably would apply to all of those different payment systems and every sort of payment transaction out there. Now, how costly would that be, and how much of an investment would it be for firms and the UK economy? So it'd be really interesting to see how that plays out.
Yeah, no, absolutely. And I think another thing that would be good to go over, so we mentioned romance scams earlier. Are there any other common app fraud scams out there at the moment that are targeting consumers and businesses? Are there any particular ones that have seemingly started to rise up that weren't necessarily being used as much a few years ago? Tay, I don't know if this is one for you.
Sure. So I think in response to the increasing controls banks are putting in place, fraudsters, obviously, as ever, are trying to find new ways around them. So we've seen a huge uptick in card scams, where we've got a lot of controls on the payment systems, but not necessarily on the cards. We've seen a huge uptick in anything that's high volume but low value. So typically under your thresholds that banks are employing to try and get around creating extra alerts and things like that. So those are the main things that we're seeing. Again, purchase scams are absolutely huge on the radar for exactly those reasons. That high volume, low value, very difficult to detect. And that's definitely those trends that we are seeing. You may have seen in the news recently as well. Mule accounts are popping up more frequently in savings accounts versus your current accounts. Again, because of the controls that are being applied to current accounts and retail account banking. So fraudsters are very much trying to exploit every avenue possible. Another trend that we're seeing, probably in response to the change in regulation, is an uptick in fraud being experienced by SMBs. So that's your invoice fraud, your CEO fraud, etc. And we're probably seeing an uptick in that because the PSR and the current liability framework does cover SMBs. There are certain criteria. I'll carry on. There are certain criteria that SMBs have to meet, but I think over 80% of SMBs currently fall under the PSR guidelines. So previously, where SMBs may have been kind of hesitant to report fraud due to the reputational risk on premiums and insurance, etc., we're seeing an uptick in reporting there as well.
Yeah, I completely agree. And I feel that the reimbursement model is not stopping people from trying to get some recompensation, because if it doesn't fall into the liability model, they can just use the usual route of the firm, which means that the compensation amount could obviously exceed 85k. So it's quite a risk in all regards, I think, to make any sort of claim and to receive that. And I mean, I've always sort of wondered why invoice and impersonation scams are so popular, other than the obvious. I mean, you get a large value of funds in a lump sum, demanded in an invoice or an email to the victim. And I've seen a rise in sort of HMRC fake invoices, and that's because it invokes a sense of fear. As soon as you hear from the tax man, you're going to act immediately. And if you get that payment received by faster payments, the scammer will receive it almost immediately. I mean, the maximum time is up to 2 hours, but if you do it before the cutoff time, they will get their money quick and fast. And if you get a lump sum of 12k for national insurance contributions, for example, if you're an employer, the scammer will receive that straight away. So it's so imperative, again, that transaction monitoring capabilities are just as fast and wide-ranging. I also think that staff are your anti-prevention tool. The more vigilant and educated they are on a continual basis, the better the chance of catching the fraudster, or at least forming a good evidence base to support the firm in the standard of caution argument in claims. I do think romance scams are a little bit harder for firms to detect, because they happen over a phased period, and they can even occur internationally, which means from a digital perspective, authorities rely on IP address locations and national authority databases. There are so many sources of data for fraudsters to feed from, as they extract this from the hundreds of dating sites out there. And there's clearly a high volume of sensitive data, which in my view invites the need, again, for the Information Commissioner, aka the ICO, to monitor data used by scammers and to even visibly work a bit more with the UK and international regulators.
I would just add around the reimbursement. Obviously, we talk about 85k, we talk about potentially that lowering down. I think it's important to be reticent of that is at your first door to reporting fraud. If you go to the financial ombudsman, and again, it applies to SMBs as well, of a certain size, then you could be looking at being reimbursed up to £430,000 by the powers of the financial ombudsman. So when assessing risk, when assessing financial risk, and that capital and liquidity you were talking about earlier, Jazz, I think it's very important to be reticent that the 85k isn't the end all be all of the scope of financial risk.
Absolutely.
From my perspective, something that surprises me, I think, given how publicized this type of scam has been in the media, is what I call a safe account scam, where a criminal will convince someone to move money into a safe account at another payment provider. I won't name any names, but you probably have seen some of the report in the media. And when the money, for example, from a company director is being moved to a safe account at another PSP, then again, there's the potential for APP fraud to be in scope here when it's been authorized by the actual payer. But it's a little bit surprising that how prevalent this is still in the UK, because obviously looking at the statistics and having conversation with our clients, it seems that this is something that is still that the members of the public still fall for, and I think the education piece needs to be probably initiated by the industry as a whole to ensure that all the type of scams are really in the mind of the general public.
I think high volumes, low value is really a key word in Asia. We've seen a lot of countries where they move quite quickly to QR code payments. There are lots of QR code payment scams because it's so easy to just print off a QR code, change the name at the bottom of it, and then collect hundreds or even thousands of small transactions every day. I think, and the risk here for regulators, I suppose, is balancing that push for financial inclusion and reduce checks on these accounts, on these small payments, to encourage financial inclusion, and the risk of compensating potentially thousands of account holders and for thousands of transactions.
Yeah, absolutely. I think a good place, just before we go on to the audience questions, would be to explore slightly the products and strategies that firms are using to deal with app fraud, and also AI. I think that at the moment we're obviously dealing with increasingly innovative use cases for AI, and that's, it can be a friend or a foe to dealing with app fraud, I think. So it'd be interesting to explore how it's being used and some of the limitations there. So yeah, I think products and strategies, what are firms using at the moment to deal with app fraud?
So in terms of, again, touching on the previous topics that we've covered, inbound payments is a huge thing at the moment. Being able to use inbound payments to profile payments that are coming in and then using them on the outbound as well. We're able to get a really effective view of what the network looks like, how old are these accounts, how often are they transacted with, etc. And again, we see that both on the inbound and the outbound, and firms are using these more strategically now to make sure that we're building up a list of not only what looks good and what doesn't, but also building up a list of what a potential mule is and how can we then follow that end to end using a network analysis tool that Feedzai also have to see what that network looks like, what that broader network looks like, and how we then feed that into treatment strategies. And then to Jaspreet's point earlier, how do we then investigate that and take that on? And not just that, it's a huge kind of emphasis on making sure that we know how each customer transacts separately from another customer. It's not viable to group customers by demographic. We see crypto scams, for instance, hitting everybody across demographics, something that we previously didn't see. Romance scams, again, there's no distinct form of this is what a romance scam victim looks like, etc. And that is across the board. So it's now more important than ever to make sure that we are just looking at how this customer transacts, that segment of one profiling, where we do have all of the data all of the time. We've got multiple data points that we can extract from to build up a better picture of that. And then kind of moving into the AI of it all, we're using machine learning models. We're being able to deploy models a lot faster than we were able to beforehand. Previously, I think traditional methods, you need about 3 months of data, etc., to build up that picture. We no longer need that anymore. We've got that view of what is normal and what isn't, kind of right from the get-go. And this obviously with neobanks emerging, etc., and traditional banks trying to hold on to their customers, we're using this not only to capture that fraud, but make sure that we're not unnecessarily bothering other customers. We're not increasing false positive rates. We're making sure that the customer journey still feels seamless, but we're increasing friction for those who need it.
Yeah, I mean, I agree AI is useful, but just on the false positive points, I've had quite a few firms express concerns with the volumes that it's produced, and they're worried about a fraudulent transaction being missed. So although I think it's quite arduous, I think a truly robust AI-based prevention approach should encompass both automated results with secondary human checks by the AML team. But again, it's a question of costly resource and time. I mean, you're overhauling a whole sort of financial framework as well, because you've got to think about the cost implications of keeping up the software and also the updates, and then training staff as well, and then also having those human checks and having MLRO's oversight of these things. So it's quite a demanding process, I think. So AI is definitely the future in terms of providing a wider set of data. There's that term again, data. But I think it's really important to have the human touch, especially with romance scams. I mean, in the news recently, there was a £128,000 gain from a romance scammer over a period of 5 years. And the first question I thought as a consultant is, how bad are their transaction monitoring and fraud controls? I think it's really important that there's that consistent application of KYC, literally know your customer at the outset on an ongoing basis. Just keep checking in with your customer, obviously without being obsessive about it, but just having the right controls and an independent oversight of those as well is really helpful. That said, I just wanted to also say that lots of firms are thinking about insurance. So there is that option out there. Even the smaller PSPs are considering it because they are receiving those red herring claims which exceed or could possibly exceed 85k, and it worries them. But again, insurance is quite costly too. So, let's see what other products will come about.
To the point around the romance scams, I think that's a really good example of where we're seeing AI being engineered by fraudsters. The rise of fraud as a service, especially with AI models, where you pay for a certain subset of deepfakes, etc., to then exploit customers, exploit people based on their emotions and various other ways as well. And I think that's one of the fantastic things that we're doing at Feedzai. We're really reverse engineering the technology that scammers are using to industrialize scam creation, to create a mass scale of synthetic ID opening, etc. And we're using that to evolve into initiatives like Scam Alert, the example that I gave earlier, and making sure that we're catering to clients not only during their full transaction process, but also on the other end when it does go to operations, when it does go to investigations, making sure that we are creating a kind of smarter way of working, almost making sure that they have all the data available to them to make decisions and to educate customers. And I think this is the really important thing about AI. We see and we hear such horror stories, and it's really important to remember that there are so many good things that can also come from it. As fast as the fraudsters are moving, Feedzai, for instance, has a huge research department, and we are looking at what's happening in 5 years. What do we think is going to happen in 10 years? So that it's not a case of firefighting constantly, and that we are trying to stay a step ahead of the fraudsters.
And I think I'm really enthusiastic about AI personally, as a former MLRO and a consultant advising MLRO, because I can see the potential there in greatly improving the operational efficiency at firms. Obviously, the automation of routine tasks will free up the time of human experts, and that will allow them to focus on complex fraud investigations. And I think that's really a good positive from AI. It obviously needs to be calibrated correctly and fit for purpose, fit for the type of transactions that the firm is expecting to process. But to me, to be able to free up time, valuable time from fraud professionals, so that they can actually work on complex investigations is really key here, especially that fraudsters can also use AI to make their scams more sophisticated and more intense in terms of speed and volume. So it's kind of fighting, like Teja said, fighting the fraudsters with the tools that they will be using themselves, really, to ensure that there is everybody is on almost, shall I say, an equal footing. But in terms of what worries me a little bit is that what we've seen in terms of the speed of technology from obviously artificial intelligence, which is readily available to everybody and really easy to take up or educate yourself on if you have bad intentions. That's really concerning, because it allows the entire world really to come up with new schemes, and we as an industry will need to make sure that we keep up with that. The rapidity and the pace of changes, the AI duplicate that greatly. So it's a constant battle in my view.
Yeah, I think with AI, it's going to be a case of AI versus AI, good and evil. Really, you're going to need to have these really innovative, forward-thinking products coming, to be able to deal with and spot app fraud that is harnessing AI technology. I think that's going to be one of the challenges that the industry and also regulators are going to have to face up to in the next few years. So before we finish up the webinar, I wanted to turn to some of the audience questions that we've got. They do focus a lot on what qualifies as app fraud. So I think there's some interesting stuff to be explored there. The first one's coming in from somebody in the crypto industry. And this person asked us if a victim had full control of their accounts, opened them with legitimate KYC documents, and voluntarily transferred funds to a bad actor's external wallet after converting them to digital assets, would this qualify as app fraud? And what additional measures beyond risk warnings can a crypto exchange take to protect customers? I don't know if anyone's able to take that one.
I'll have a go. So I think the answer is yes, essentially. It would qualify as app fraud. So that's one view. And that's because I'm just advising on the facts here, as it could be a bit more to the question. But as long as there's an element of intention to manipulate, and there was a transfer of funds into a relevant account held in the UK at some point in the transaction, it therefore brings a good argument that app fraud has occurred. Now, in terms of additional measures beyond risk warnings, awareness and education to staff is very important so they can readily identify and call out those risks before more damage has been done. It has been known that crypto exchanges may sometimes look to bend the definition of customer due diligence and KYC in the name of onboarding more customers or providing a better experience. And so this is where the fancy AI techniques are very useful in going above and beyond transaction monitoring. So this includes IP lookup or browser and device fingerprinting and email searches.
Brilliant. And also, should spoofing be considered a form of app fraud? This has actually been a question that I've seen coming up a few times recently as well when I've been in Brussels. I think it's one of the things that's being debated a lot in the trilogues for the PSD3 and PSR.
I think obviously someone could contact you pretending to be another person or another organization and could use spoofing techniques to sound credible, and using fake companies, even using AI to sound like someone else or look like someone else or produce fake documentation that is really, really convincing. I've seen some of online that really sounded really was mind-blowing, I would say. So the AI is really talking about what we talked about, something to keep in mind as well. But all of this can trick people into thinking that they are dealing with someone that is genuine. And I think as a result, if a customer has been tricked into authorizing a transaction because they have been, genuinely thought that they were paying someone that they ought not to pay, that will definitely should be considered as a form of APP fraud. Obviously, the victim should ensure that once they are aware that they've been victim of a scam, report the fraud to the bank, but also the police on action fraud. I think it's very important so that a swift action can be taken from all parties, really.
That's fantastic. Tate, did you want to add something there?
Sure, just to add, I think the definition of spoofing has also changed quite substantially. So PSD3 at the moment, they recognise spoofing in conjunction with kind of impersonation scams, etc.
Yeah.
And it is in scope of reimbursement. But I think kind of the more traditional approach is looking at what that spoofing actually looks like. Is it a third-party link? Is the account access actually third-party only where credentials are compromised? So I think when you delve into kind of the detail of it, either way, it's subject to reimbursement. but the way in which you would combat that and what that would look like in terms of the actual transaction fraud monitoring is very different.
Fantastic. Brilliant. Well, guys, that's all we have time for today. But thank you so much to all our speakers. It's been really interesting, and I'm sure this subject will continue to come up. So yeah, I'll pass back to my colleague Jack now, and have a good day, everyone.
Thank you.
Thank you.
Thank you.
Thank you, Jimmy, and thank you to our speakers. And finally, thank you for attending today's session. As mentioned at the start of the broadcast, this webinar was recorded and a video will be sent out to all attendees in the coming days. If you have any questions during the broadcast that were not answered, a member of the Vixio team will look to get back to you with a reply also in the coming days. And finally, if you have any questions about anything to discuss in today's webinar or like further information, please get in contact with Vixio via email at info@vixio.com or visit our website vixio.com for more information. Thank you again for attending today's session.